This is the briefing for Friday, May 26th. For really the last week, we really have not gone anywhere in the stock indices. And for that matter, we've really just been in a rotational pattern in multiple time frames, as I've discussed in previous briefings. Now, yesterday we had somewhat of an up day, and then of course we had follow through in today's trading. Now, this is the high for last Friday. So this is a week's worth of trading through here. So you can see that we've come from this low to this high to this low to this high. So we're exactly in a rotational time period. This happens to be a 30-minute chart of the spiders, and this is a 30-minute chart of the Qs. A little bit different price pattern in terms of the Qs. Now, the question here is what's happening internally with this rally? Since we're testing the recent highs, we have a double top, but it's not a double top until we see some type of rotation back down again. But it's going to be interesting to see what happens if and when we break above the high for today and the high for last Friday. Now, the NASDAQ, based on NVIDIA's earnings and other higher weighted tech earnings within the NASDAQ is really in vertical development higher, and that's really easy to be seen. We had somewhat of a correction here, but then the rally just basically took off. So you can see going back to this is last Friday right through here in the NASDAQ, and you can see the difference of what's occurred in terms of price development. So the NASDAQ has taken out the 19th high, where the S&Ps or the spiders are just testing the 19th high. So basically, if we look at where we are on a little bit longer term basis, once again, we have this rotational pattern, then we have this rotational pattern. We had a smaller rotational pattern within this one, and then we had this breakout and a retest of this low right through here, and then of course Thursday's trading and Friday's trading brings us right back up to where we were a week ago. Now, looking at where we are in terms of market breadth, you can see that market breadth improved somewhat today. Now, this was 1,117 shares positive for market breadth. Really not anything to write home about, so it was not a well-strengthened rally. And you can see also that volume in the spiders was down or basically flat for today. New highs minus 52-week new lows, still negative, but better than it was in yesterday's trading. It was negative 289. And of course, that strengthened somewhat in today's trading. So a little bit of strength coming in terms of the internals. But I'm really not sold on the fact that this market is strong from an internal perspective. Now, there's two things that I look at when I analyze the markets. One is price development. What is the trend? And as you can see here, depending on the time frame you're looking at, the trend is flat. If you look at this time frame, if you look at this time frame or this time frame, the trend is up. But for right now, we really are still testing upside resistance in this 418 to 420 area in terms of the spiders. Looking at the NASDAQ, you can see basically the same thing. This is the same area that we just looked at in terms of the spiders. This is the breakout that occurred, the rotation back down earlier this week, and then of course the breakout move higher. Basically, as a result of NVIDIA's earnings were yesterday, and there's some higher weighted tech stocks that are just really performing very well, at least right now. Only 1,260 shares positive in the NASDAQ. So a little bit of strengthening, but really, once again, it's not really that strong at this point in time. In terms of the Russell, and this is where the intermarket divergence comes in, you can see that the NASDAQ is well above the S&Ps, and the Russell is really lagging both of those indices. You can see the other two indices were either breaking out in terms of the NASDAQ or were testing this high, and I'm sorry, it should be right around this high as the 19th. And that was up in this area here, and you can see the Russell is basically down at the lower extreme of this area of rotation. So, and it's in the middle of that extreme, at least for right now. Volume on the Russell was down slightly, but fairly positive breadth in terms of the Russell. In terms of being overbought or oversold, we are really just approaching overbought, so this does not preclude the indices from going higher on Tuesday, Monday being a holiday. But looking at total volume, it's very, very interesting. And I've said this before, volume is the fuel that drives a trend, whether it be an uptrend or a downtrend. And really, we're just not seeing any type of volume. And you can draw a trend line right through here, and you can see that volume is just not coming in. This is total volume on the NYSE. This is total volume on the NASDAQ. And you can see, even as we had this huge move today, that total volume on the NASDAQ was down and not up. Now, we did have a little bit of an increase earlier in the week, but this was on this downtrend right through here. So watch what happens with volume, especially in terms of the S&Ps and the NASDAQ in the coming week. Now, I want to talk a little bit about the percentage of stocks above their 50-day and 200-day moving averages. Now, this is shown before. This is the NYSE, the number of shares, or the percentage of shares above their 50-day moving average, and this is the percentage of shares above their 200-day moving average in the NYSE. Now, very interesting. You can see we were at higher highs back in August, and in January or February, you can see we were at higher highs, and you can see we were above 80, almost 85, 86% of stocks were above their 50-day moving average back then. We are at higher prices right now, and only 38% are above their 50-day moving average. And once again, I put a 13 and a 21 moving average on the 200-day moving percent of stocks above their 200-day moving average, and you can see that the 13 has crossed through the 21. This has some semblance of a head and shoulders top, and then of course this would be the neckline, and you can see yesterday was very interesting. We came right down to the neckline and bounced off of it in today's trading. So I found this very interesting because it was giving me a pretty good indication that the market was not as strong as it has been in the past at same or higher price levels. So from an internal perspective, this was giving me a little bit clearer picture as to what was happening from a broader perspective within the indices, and really gave me a pretty good indication that while the indices were trending higher or trying to move higher, it was the higher weighted stocks within the indices that are pulling it higher, when the majority of stocks are actually beginning to underperform. And you can see that right through here, a little bit of a tick up in today's trading in both the 50 and the 200-day moving average. Now, I also did this for the S&P 500. So this is the percentage of S&P stocks above their 50-day moving average, and this is the 200-day moving average. So once again, I put a 13 and 21 moving average on the moving average, and you can see that it gave a pretty good signal that we were not going higher, going all the way back to May 1st of this year. So, and you can see the trend for the S&Ps is down. Now we can go all the way back to February, back through here, and you can see that the percentage of S&P stocks above their 50-day moving average was in the 70 to 75% range. We are at a slightly higher or same price level, and the percentage of stocks is only 35%. That's just a red flag that is screaming at us that something is not as strong as you would think within the stock indices just looking at price development. The same thing is occurring within the 200-day moving average. You can see here's the high going back to February of this year. This is the high of today, testing the May 19th high. So you can see the May 19th high was here, and you can see where we are today even. So we were at 46 call it 47% of stocks were above their 200-day moving average on May 19th at the same high we are today, and only 40.64 are at the are above their 200-day moving average after today's trading. So the trend of stocks trading above their 50 and 200-day moving averages in the S&P is declining, and declining pretty dramatically. In terms of the NASDAQ, I've done it again on the NASDAQ. Now, we basically have the same thing. This is the February high right here. You can see that the percentage of NASDAQ stocks was at 80%. And in the 200-day moving average, it was at about 58, 59%. Now we are at much higher prices. You can see price was right around 311, 312. Here we're now at 348. And look what's happening here. I mean, even in the last 3 days of trading in this week, it was declining and really basically coming down to test trend, and then bounced slightly in today's trading. 200-day moving average is really not going anywhere. This is where we were back in February. This is where we are today. And look at the percentage of stocks. There's a clear indication that this rally that we're seeing in the NASDAQ especially, and even in short term in the S&P and the Russell, is basically not a very strong rally. And this gives me great concern of what can happen to the downside in this market unless the internals were to change. Now, typically from a psychological perspective, I always feel like there's about a 70% chance that price will correct to the internals. That means there's a 30% chance the internals will correct and support price. So there's always that possibility. Typically that'll happen, at least I've noticed that it happens around a news event. So if there's some type of news event that comes out, it could basically change the internals. But for right now, I am very concerned about the internal weakness of this market, because it does not appear to be strengthening. It appears to be really weakening, and especially this looks like it is a strengthening trend. But when you compare it to price and price development and what's happening within the NASDAQ itself, this is really not a good scene. And then finally, looking at the Russell, you can see the Russell in terms of price development is really not going anywhere. So you can see going back into February, we were at about an 80% of the stocks above their 50-day moving average. We are at about 195. Today we're at 176. We're only at 45%. And then looking at the 200-day moving average, you can see what happened back in February. And then today where we are, we're at basically 65% trading above their 200-day moving average. And now we're at basically 35%. So nothing is really going on here that tells me that this is a strong market. And especially when I go back to what's happening with volume, this is just very, very concerning that we're not seeing volume increasing, but seeing volume decrease. This gave us a pretty good indication in terms of the NASDAQ that we were likely to see some type of move higher. But as soon as it started to break out and move higher, volume started to fall off. So basically, we really do not have the internals at this point in time supporting price. Now, we have to respect price development. I mean, that's what it's all about. Is the trend up or is the trend down? But right now, we are at important resistance areas, and I like to show the spiders because I think this is really a great perspective in this rotation here. So what happens on Tuesday is going to be very, very important. If they can trade it above today's high, if volume is increasing, if breadth is strengthening above what it was today, and they close it above today's high, then we would have to take a second look and see potentially maybe the internals are beginning to strengthen to support price. If that does not occur, then I would fully expect another rotation back to the downside. Have a great long weekend. I'll pick this back up on Tuesday.